Hello, traders from the inner circle, and welcome to the first chapter, which is the introduction to smart money. Now, I think it's not a secret to tell you that the whole Forex market is super manipulated and driven by smart money. But who are they? Well, actually, smart money are just big institutions and big banks with a whole lot of liquidity which are moving the markets. Okay, so they are actually buying and selling this whole market that you can see over here. So, this whole chart has been moving to the upside, downside, upside, downside, upside, downside. So, they create structure. And the thing is, especially in the Forex market, they are manipulating the markets for their advantage. Okay, so mark this point. This is kind of the thinking which you need to develop in order to be successful by trading in the Forex market. You need to understand that this market is super manipulated and that they are doing it in order for them to make big profits. The retail traders are going to be those ones who are going to lose the money at that point. Okay, and this is kind of how our whole strategy is based on. It is based on following their footprints, because this is how we can make money. Now, smart money will always make profit at the end. Our job is to just follow their footprints, because we don't know when the market will go up and when the market will go down. But based on the knowledge that we have, what they need in order for them to execute their longs or their shorts, this is how we can take our advantage out of the Forex market. Now, in this video, I'm going to show you actually how they're moving it and how the liquidity itself is moving. Because you got different types of smart money. You got, in the first place, the big super banks. Okay, so very big banks like Goldman Sachs, JP Morgan. Okay, they are super incredible big. They have so much cash. Now, you have also the smaller institutions. You have hedge funds, and you also have big investors. Okay, now, these are some types of it. For us, it's not important to clarify which one they are exactly, because we can see them already on the charts. Now, what do I mean by that? Well, actually, the bigger an institution is, the higher the time frame will be that they are looking for. Okay, so a hedge fund will more than likely look on the minute charts, and a big institutions, they will only look on the weekly, monthly, daily, 4 hours, something like that. And you can see it on the chart because they are creating a trend. Okay, that's super important. Look at this, guys. For example, I'm starting here with the weekly time frame. Now, on the weekly time frame, if I'm going to map out right now just the important points, so the key levels, the key structural points, so like this here, from the downside to the upside, from this low till this high. This is something you should be definitely familiar with. The next chapter will be structure. But look at this. I'm going to mark this right now in a color, like let's pick up red. Let's just use this one to make it very big. Then from here till this point, from this point here. And you can see a very clear trend, right? So we'll mark right now just the big trend over here. Perfectly. Now, this trend was created by a very big institution. So this institution was acting on the weekly time frame. So he had the knowledge, which you will understand later on, that he wanted to go till this supply zone here at the top. That was actually his idea of trading, that he wanted to target exactly this specific supply zone, and he took out liquidity from the downside in order to bring it to the upside. But for us right now in this chapter, it's just important to understand that this trend was created from a very big institution. Now let's move on the daily time frame. What we see here on the daily time frame is another trend within a trend. And I'm talking about this trend over here. You can see at the price actually, let me mark this in blue. Let's make it a little bit thinner. You will see the price created actually this trend. So it is a trend within a trend. The only difference here is that this institution who created this trend was just much more smaller. And the same game can be repeated then on the 4 hours, on the 1 hours, and so on. Okay, so you got right now here, just for the understanding, you got an institution which created the red trend. Okay, so it's a big bull run. Now another institution, they did not have that much liquidity, and what they did was actually they've been creating the blue one. So they've been pushing it from here to the upside, then they've been selling it to the downside in order for them afterwards to buy it all the way back up. Now if we will switch here to the 1 hour time frame, for example, just looking at this trend, you will see that you have here another trend within the blue trend as well. So you have here, let me mark it green. Okay, it's not the best color. Yeah, purple. So you got here another trend within this trend. So, okay, perfectly. So what I wanted to illustrate with this example, guys, is that the red trend line, the red trend was caused by a very big institution. The blue trend was created by a smaller institution. So look at this. The red institution over here was able to just press the buy button over here. Okay, so he pressed the buy button over here, and he brought the market all the way to the upside because he had so much cash. The blue one was not able to push it that far like the red one because he didn't have that much cash amount in his trading account. So what they did is actually they've been selling over here. Why? Because they need liquidity. Okay, and by bringing the price at some point to the downside, they are faking the people to illustrate them that we have a trend change. Okay, so you can see how the price actually here broke structure to the downside, and the majority was then looking at this point over here to sell it, and what the market did is it went just to the upside. And this is kind of the idea. The bigger, the smaller institution is, the more liquidity they will need in order to bring the price that high like the bigger institution. So they will need to sell the market earlier than the big institution. So also the red institution is selling at some point because at some point they don't have that amount of cash in order to bring it higher to the upside. So they will need to do the same thing as well. But the blue institution will need to do it much earlier than the red one. And if you look at this one over here with purple, now these institutions, they needed it even earlier. So look at this, they created this trend over here, uptrend, then breaking structure in order to illustrate them to that the price will move on, then giving you this here kind of thing, and then it fails to go lower and it will just push up higher. And this is how they've got the liquidity in order to also move on with the bigger institutions, which is the red one and the blue one. Okay, so this is super important thing, guys, that you need to understand. And this game is repeated, will be repeated on every single time frame. So let me just go back here to show you For example, not sure if I can go right now that far to the downside. Yeah, to the back. Yeah, here minute 15 is already the trend. But look at this. You could, for example, also use this here, right? This is also a trend, okay? So you will see it much clearly on the 1 minute time frame. But look at this. This is trends that the small institutions are creating, okay? So very beautiful example, guys. This is how institutions are acting within the market. So you need to understand this one thing, okay? The black institution is the smallest of all institutions, and these are actually all types of institutions with these structural points that we've mapped out right now. With these 4 different colors, we covered up every single time frame. Of course, you could go right now to the second time, to the 1 second time frame or 5 second time frame. It will not bring you much further because you will just see the black trend just more clearly, but it's not important for us. Okay, this is how I mapped out. I go maximum to 1 minute time frame, but you will see the same result which I covered up right now on the minute 50. Okay, well, basically that's it. Okay, so hopefully you got this kind of concept right now. So this is how institutions are acting. They are just pushing the prices in a certain direction. The decision that they do is not always based on chart technical analysis. This is super important. It is because of the fundamentals, okay? So they have their directions. They know exactly, okay, we got inflation, for example. So the dollar index is super weak. This is what we need to push the GBP to the upside, or we can push the GBP to the upside, because this is how we can make profit at the end, okay? And this is why every big institution at the first thing what they do is they analyze the fundamentals, okay? And then they look from a chart technical perspective where they can restock their entries, okay? So they're always scaling in, they're buying and buying and buying. And what you can see over here, that one red institution, okay, they were scaling here, scaling here, scaling here, scaling here. This is how they did, okay? And the small institutions, what they do is they're buying here, they're buying here, they're buying here, then they go a little bit in loss, and they're buying here, 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 here. But at the same point, they're selling here, they're selling here, they're selling here, they're buying here again, then they're selling here, buying here, selling here, buying here, selling here, buying here, selling here, and so on. Okay, this is how it works. This whole market is always the institutions are always buying and selling it, and with the right risk management, they are going to always mitigate their losses. So in this case, short is definitely not the right answer. So going short here in this market is not very smart, okay? And this is smart money, okay? Now what they do is actually they're selling right over here, and at the end they will close all their shorts till this point are going to be closed. But at the same thing, they will open here some shorts, push the price to the downside, and then they will close the shorts again at break even. But this is kind of thing which we will discuss in the next chapters. So this kind of thing over here, guys, should be just an introduction to smart money, just for you to understand that we have certain trends, okay? To sum it up, we have certain trends which are created by institutions. The big institutions are creating a much larger trend, which can be reflected on the weekly time frame or on the daily. Then the smaller institutions, they are creating the trends on the 4 hours, on the 1 hours, and the much smaller hedge funds, for example, they are creating it on the minute 50, minute 5, minute 1, and so on. Okay, hopefully you got the point, and see you then in the next chapters, guys.